Hey, it's Josh from JoshLM Finance. All right, we've got to talk about Nvidia because as 2025 is closing out, they've just made a colossal move that is sending shockwaves through the entire AI industry. I'm talking about a massive deal with the chip startup Groq. Now look, this is way more than just another headline. It is a defining moment for the tech landscape heading into 2026. So let's break it all down. So what's the price tag for a deal of this magnitude? $20 billion. Let that sink in for a second. To put that into perspective, this is one of the biggest strategic bets Nvidia has ever made. A number like that tells you everything you need to know. They're not just buying a piece of technology, they are buying a piece of the future, plain and simple. So first up, let's get into the specifics of the deal itself. And I want to be really clear here. This is not a straightforward acquisition. Nope. This is a highly strategic partnership, and it's one that's designed to completely reshape the AI industry. So what exactly are the terms? Well, first off, Nvidia gets a license for Groq's absolutely lightning-fast inference technology. Second, and this is arguably the most important part, the talent is moving over. We're talking about Groq's founder, Jonathan Ross, and his A-team joining Nvidia. But here's the kicker. Groq actually stays independent. You see, this is all about integrating the brains and the tech, not just buying up the company's assets. It's a much smarter play. Okay, so why in the world would Nvidia spend $20 billion on a deal like this? Well, it all comes down to the AI chip battleground. This move is all about securing dominance across the entire field. To really get this, you have to understand that the AI market has two very different sides. On one hand, you've got AI training. This is the heavy lifting, right? Teaching the models with these massive, enormous data sets. And that has always been NVIDIA's kingdom. But then there's AI inference. This is the other side of the coin. It's getting a real-time answer from the AI. Think about your chatbots, self-driving cars, instant recommendations. That is a totally different and frankly, a much faster growing market, and that's exactly where Groq is king. So what's Groq's secret sauce? What makes them so special? It's all in their architecture. They use this super high-speed memory, SRAM, directly on the chip itself. Okay, think of it this way. It's like putting the fuel injector for a race car engine right inside the cylinder. There's no lag, no bottleneck, just pure, unadulterated speed. This delivers instant AI responses, and it can just blow past traditional GPUs, which, remember, were built for training, not for these real-time answers. This move really pulls back the curtain on NVIDIA's three-step playbook. Step 1, close that gaping hole they had in high-speed inference. Step 2, neutralize a very dangerous competitor by basically absorbing their unique advantage. And Step 3, consolidate power and position themselves as the undisputed one-stop shop for the entire AI pipeline, from start to finish. All right, so that's the strategy. But what did the market think? Because how Wall Street reacted tells us a whole lot about what investors really believe. Now, at first glance, you might look at the chart and think, just a modest lift. But that's where you have to look at the context. That small bump came on top of an absolutely incredible 40% rally for the stock in 2025. You see, this wasn't about a sudden spike of new excitement. This was a confirmation of sustained long-term confidence. The market already believed in NVIDIA's vision, and this deal just proved that they were right all along. And you know, the analysts are all singing the same tune. The consensus on the street is crystal clear. NVIDIA isn't just playing the game anymore. They are literally writing the rules and shaping the industry standard for AI hardware. So let's bring it all home. What is the investor's bottom line here? What does all this actually mean for your portfolio? I think there are three huge takeaways for any investor watching this. First, this expands their leadership. NVIDIA is cementing itself as the fundamental platform for the entire AI industry. Second, it creates a much wider competitive moat. The hill for rivals like AMD and Intel to climb just got a whole lot steeper. And third, you have to think about valuation. A $20 billion price tag proves that NVIDIA is willing to pay any premium necessary to lock in its future growth. So what's the verdict here? When you put it all together, this isn't just another partnership. It is a loud and clear statement about NVIDIA's ambition to utterly dominate the AI landscape as we head into 2026 and well beyond. And that leaves us with one really big, lingering question. Is NVIDIA building an AI monopoly that no one can compete with? Is this kind of consolidation good for innovation in the long run, or is it just too much power in the hands of one company? I'd really love to know what you think, so drop your thoughts down in the comments below. Thanks for tuning in. If you want more clear, no-nonsense breakdowns just like this one, do me a favor and hit that subscribe button for JoshLM Finance. Stay smart out there, and I'll see you in the next one.